the charts and trade with very small size, blue belt dollar trading, because that's what's actually going to teach you. You'll learn far more by just doing it and keeping notes, keeping a journal. Writing your own book is more important than reading a book. Are you reading books about trading and not keeping a journal of your own? Then you're doing it the wrong way around. Write your own book every day. Here's my observations. Here's what I learned. Here's what I want to research. Here's the extra studying I did. Here's my trades. Here's what went well. Here's what didn't go well. That will teach you so much more. And I mean, the main reason for that is because, like, when you read the two books I do recommend, which is Reminiscences of a Stock Operator, which is about in the early 1900s, about Jesse Livermore, legendary investor, and he talks about it as well. He's like, the stuff you see on the news is just propaganda. The news is lying to you. It's people shilling their bags. Do you not remember this? Remember Matrix Report? Matrix Report, fucking, the ETFs are going to be rejected, crashed down. Didn't, obviously, and fucking went higher. Like, and then if you read the Market Wizards books, where the author interviews a bunch of legendary traders, some well known, some not so well known, but some absolute goats in there: Paul Tudor Jones, Stanley Druckenmiller, etc. And all of them, when they talk about what's important, none of them say the news. They don't say that I read the news and then I make my decisions. News can be an input. There's some people who trade breaking news, but they don't trade the news itself. They trade the chart based on the news. But this isn't that. This is not like whenever someone puts a tweet up about Grayscale selling Bitcoin. That doesn't cause Bitcoin to move. It's not moving the market. But it does ingrain in people's minds why this happened. And people, it's just one of the biggest flaws of dumb money is that they care more about reasons than reality. They don't care that they bought 49k and they're now down at 40 and they fucked up their trade entirely. They don't care about that. As long as there's a nice reason, as long as they've got a boogeyman to blame, as long as they can blame big bad Grayscale. And why is that? Because the human tendency to not take responsibility for your own actions. They want a scapegoat. They don't want to admit, I was a fucking retard. No. It was Grayscale. It was manipulation. So try and avoid that as much as you can. Here's a good tweet I saw that I don't agree with entirely, but has, what it is a really good framing of the bull case, right? Why do I remain very bullish on risk assets? Inflation's coming down, interest rates as well, the economy remains strong, soft landing's becoming a reality, Trump will win, peace talks are in the air, China turned dovish after 2 years, QT will end in 2024, global liquidity is increasing, AI-driven growth in the process of accelerating to a point the human mind can't even comprehend. What else do you need? So, none of that is actually true yet. Well, global liquidity is. Alright, global liquidity is increasing. China did turn dovish, but China's in a bit of a mess. They need to. Inflation coming down, subjective. Inflation could literally spike again next month. You can't say it's coming down. Because it came down, but it's actually now sideways, if not slightly ticking up. But I get the sentiment. Interest rates are coming down. That hasn't happened yet. It's expected to happen, but it hasn't happened yet. The economy remains strong. Again, that's past looking. Right? That's looking into the past. The US economy was strong last month, last quarter, right? Will it continue to be? Soft landing is becoming a reality. Yeah, that part is pretty much true. It doesn't mean it will continue, but that is the current state of things. Trump will win. Highly subjective. I would love Trump to win. Be excellent for the markets, but it doesn't take a genius to say that's highly subjective. Peace talks are in the air. Lol. Anytime there's war, there's talks of peace. But we all know that the perpetual war machine does not want to end. So I would call bullshit on that 100%. And I'm always bearish on the idea of war ending. Not because I don't want war to end. I fucking think war is completely pointless. Entirely pointless. There is no benefit in it for the average person. But there's benefit in it for the people who profit from war. So I'll believe that one when I see it. QT will end in 2024. Again, the Fed have indicated that, but it hasn't happened yet. And AI-driven growth is in the process of accelerating to the point. This is true. As in, AI is obviously unstoppable. It is the next internet. People still fading it or just fading the internet in 1990, 1995, whatever. You're on the wrong side of history. You're on the wrong side of history. If you think AI is nothing, it's just a fad, it's a flash in the pan, it's not fucking true, right? Now, a bunch of those things I just said hasn't happened. But here's the point. You're supposed to speculate on these things before they happen. This is where the edge is. This is why I'm bullish on risk assets. Not because I know all of these things are going to happen, but because if you wait for Trump to win the election, the markets will already be 40% higher. If you wait for QT to officially end, the markets will already be higher. If you wait for peace in the Middle East or whatever, the markets will already be higher. Right? If you wait for interest rates to come down back to 2%, 1%, fucking zero again, the market will already be higher. Because if there's anything in this that isn't proven and you're like, that's a bit subjective, that's a bit, maybe it won't, maybe it will, that's the whole point. That's why there's edge in trading it, because it's not priced in. You can't fully price Trump winning in yet. It's literally 50-50 him and Biden. So at best, the markets are pricing in 50% chance of Trump winning. But if you say, all right, I believe there's asymmetric risk reward here, that if Trump does win, the markets are going to be so much higher that it's worth the bet of getting long now. It doesn't mean the risk isn't there of him losing. He could lose. But it's the bet you should take. There's also a point, I was listening to a clip on Twitter or something, can't remember where it was, but in an election year, the stock market tends to go up 8%, right? Which is actually the standard. The long run average for the S&P 500 is about 8% year over year. And in an election year, it pretty much tracks at that level. But that's the average across all election years. When you narrow it down to specifically years where there's a Democrat incumbent, right? So it's not an 8-year election where there has to be a new president no matter what. Whenever there's a Democrat running for re-election, like Biden, it's actually 15%. It's almost double. The stock market outperforms even more when there's a Democrat running for second term. Why? Probably because the Democrats are far more loose with their fiscal policy and they're just going to print shitloads of money and hand it out to people, which is going to juice the markets. You've also got Janet Yellen, who's the Treasury Secretary, who's a massive Democrat who needs Biden to win so she can keep her job. She's going to do everything she can. I talked about this the other day. So all of this is conspiring to have a big fucking bullish year. Now, there's counters to this, but the counters to this have been wrong and there's no indication that they're going to be right. So inflation's coming down. Some people are like, inflation's going to go way back up. But it's not. Right? It has came down. It might not go to 2%, but there's no indication it's going to reaccelerate back to 9%.